Okay, welcome. Oh, we have AK here. Amir Khan is here. Hello. All right. See here. Um, so let's talk about something like, whenever let's go back to the time when you started trading in the beginning, right? So I want to know what was the reason why, like, okay, so what was that one or two big reasons why you really wanted to start to trade? Just like text, write it down. Just throw it out there. Ted. Okay. Okay. Make a lot of money, financial freedom, financial freedom, time freedom, COVID. That's very interesting due to COVID. Because whenever there was COVID, there was nothing else to do. So everyone was like, okay, like, you know what? If there's nothing else to do, let's just see what we can do online. Freedom up to that point, start a side hustle, no employees, no office. So mainly it's all about, a side hustle, freedom, financial freedom, do whatever you want to do. Um, I'm not I'm not listening to anything that would say, like I was always interested in the market. So I wanted to really understand the markets. Or like, I was excited to see like, what like I started trading because I was just bored. And I was like, okay, let's just see what this is all about. My friend lost my money trading over £1 million, trying to recover that. Yeah, your friend should pay you back. I want you to understand why the and how the markets moved. See, here's the thing. So I talk to a lot of people every day, right? I talk to a lot of people every day, and a lot of those people, they do not have funds to get education and whatnot, right? And when I ask them, okay, so why are you even trying to trade? And the biggest reason they tell me is that, oh, you know what, I have a lot of debt, so I want to pay off my debt. That's why I'm trying to trade. I have, my family is in a financial crunch, and I want to take them out of a financial crunch. That's why I'm trying to trade. I want to make a lot of money. That's why I'm trying to trade. And my next question is, and the next question is, what are you going to do with all that money? Because you really need to ask yourself that if you're trying to make a lot of money and if you're trying to trade and you're going to make a lot of money, what's the utility behind making all that money? And the next thing is, what is a lot of money to you? What's going to happen or how your life is going to change when you do make a lot of money? What's going to happen at that point? Because when I first started trading, I didn't start trading because I wanted to make a lot of money or I wanted to make more money because we were still running our business and I was doing perfectly fine. I started trading because, because I had a lot of downtime and I wanted to allocate my time into learning a new skill because someone told me it's a skill. The markets can go up and down, so just see what happens. At that time I had like maybe around 400K in savings, and I wanted to see that okay, what is this trading? So I deposited like 500 US and I started to trade with that 500 US. For me, it was never about I want to make a lot of money. For me, it was about okay, maybe this is a new challenge and let's see if I can really overcome this challenge and let's see if I can really make something out of it, regardless of the fact that I lost in the beginning and whatnot. Right. But you really gotta ask yourself these hard questions. Like, even if you do come into trading, what amount of time are you allocating trading? When I was introduced to trading, I started to believe that the possibility of leaving a legacy, yes, that's also correct. Peace of mind, grandchildren, prove that you are a scammer. Thank you. When I saw you sure you lost, I find this guy is real. Thank you. Because a lot of time what happens is when we come into trading with sort of an impulse of, saving our parents or like, having them retired, of like buying houses and buying cars, a point comes where we are so emotionally involved that it gets so overwhelming that we're like, man, like I'm so tired of losing all the time. Those emotions do come over me when you just want to give up and you say, like, I'm tired of losing all this time. But then you got to look at it back and you got to ask yourself that, okay, why are these thoughts really coming to your mind that you're tired of losing all the time? You can't win a trade, like, you can't get a break. You're looking at charts all the time, and like, your spouse, he or she doesn't support you in this, your parents don't support you in it. Whose parents here say it's a waste of time? Let's see right here. You have to be really young for your parents to say that to you. That's a waste of time. David, nice. You're young. Mihal, you're young. We all, okay. Yeah, the reason why your parents are going to say it's a waste of time, or your dad is going to joke around with you, or like, your friends are not going to support this because they're going to say that it's a waste of time, is because you're spending way too much time on the charts. When you spend a lot of time on just one thing, right, for a week, it's totally fine. For 2 weeks, it's fine, no problem. For a month, it's okay. But when you get into that third month, the fourth month, and the fifth month, and people around you start to notice that, hey, man, like this guy's spending all this time on charts, right? Day, night, evening, all this time, and all he talks about is charts, and he or she's making no money, it's a waste of time, right? If you're not going to respect your own time that you dedicate to the charts, no one else around you is going to respect that time. Because look at it this way. If you go to the gym for 5 hours a day, 6 hours a day, people are going to expect you to become a bodybuilder, right? They're going to expect, what's this over here? Will is saying no new link yet. Oh my God. Come on, Will. What? Will. Oh my God. I wish you guys were in the Sydney boot camp. Oh, I just got it. Oh my God. Will Will just looked at the first line. Oh, new, no new. Anyway, like you have to respect your time. This is why, what's this? Later. This is why we say that whenever you're trying to trade, you stick to 1 or 2 hours. Because if you go to the gym for 5 hours a day, everyone around you is going to expect you become a bodybuilder, right? Because they're expecting you to go to the gym 5 times a day. They're going to say, okay, like, this guy's going to come out in 6 months having like a great body. It's not going to work because we all know when you go to the gym, it takes about 6 to 7 months for you to get in some sort of a physique where people start to see a difference, right? So if you're spending your entire days on trading, on charts, you're talking about this, talking about that. You're waking up in the middle of the night. You're not joining your family for dinner. I know a lot of people can relate to this. If you're not joining your family for dinner because you have a webinar to attend on trading, or there's a news event that you got to watch on trading, they're going to say, man, this person's out of their goddamn mind, because they're not giving time to us. They're just looking at the charts. That's why no one respects your time. That's why no one respects this hobby of yours. But if you really have a timetable, you stick to 1 or 2 hours a day, maybe like maximum 2 hours. You stick to 2 hours a day, everyone's going to see that, and they'll say, okay, like, you know what? This person is disciplined. Not only they're disciplined, but they have a full structure around their day. They're only spending like 1 or 2 hours on trading, and we're going to respect that, right? We respect that because it's a hobby. They're trying to do this hobby, and maybe it's going to work. Who the fuck? Jonathan Satcher. They have a hobby, and this hobby probably it's gonna work, or maybe it's not gonna work. But at least they're not sacrificing other duties that they have. Maybe it's for like school work, university work, or you want to do something for your parents or your siblings, stuff like that. Hey guys, please mute yourselves if you're gonna make some noises, because I don't want any interruptions.
Sorry.
Oh, get some. For a second, I thought it was your Porsche, but it was you.
Sorry about that.
Right? My kids think I'm crazy losing all this money. They don't see any results once. They ask once a week, "Are you a millionaire?" Yeah. The thing is, it's because we really overindulge ourselves in the charts. That's it. There's no other reason. If we have like a set time that maybe from 5 a.m. to 7 a.m. in the morning, we're going to look at the charts. Or maybe in the evening time for these 1.5 to 2 hours, I'm going to look at the charts. And on the weekends, I'm just going to do simulation for about an hour, 2 hours, and that's about it. Man, when I first started trading, I was waking up in the middle of the night to look at the London session because in Canada, it used to be in the middle of the night at London session. And my wife would say, "What are you doing?" I'm like, "Oh, no, I have to go trade London Open." And little she knew just losing money, waking up to lose money and go back to bed at like 3 a.m., 3:30 a.m., and then do it all over again at like 5:30, 6 a.m. in the morning. Didn't make any sense at all. We'd go to a grocery store and I'd be on the charts. I'd go to the gym, I'd be on the charts. I'd place a trade before doing my bench press. And after my bench press, I'd be in a drawdown and I'd be like, okay, yeah, well, gym's done. Let's go home. Then I would sit in the car and just look at, okay, my drawdown, what can I do? And overtrade over there. Didn't really matter. Where she's saying now, well, she's very much involved in our business now. I actually want to do something that is recession proof online so we can do it anywhere in the world. Yes, that's true. 3 years when you make a great body with consistency and discipline. Exactly. So trading is the same way. You have to give it time. But most importantly, if you want your parents to respect your hustle, you want your siblings to respect it, you want your friends to respect it, you have to respect your own time. If you're not going to respect your own time, no one around you is going to respect your own time as well. Buy before pull-ups, then sell before bench press. Yeah. Who's doing funded challenges at this point? Nice. How are they going? Good? You're in
Good.
funded stage? I've been consistently showing up for 2 years, 1 to 2 trades a day max. Been break even for a while. Last month lost 7 trades and won 3 to 4. But break even because losses are smaller, but win ratio is low. Advice for me. What's this? For 2 years, 1 to 2 trades a day max. I'd have to see the trade journal. It's hard to believe. It's hard to believe that. I'm sorry. I'd have to see the trade journal. Failed 3 accounts in phase 2 last week. FML. It would have been better to donate that money somewhere else. At least you could have gotten some karma points. Karma points are much better than funded points. But seriously, right? If you're doing funded challenges, it got a few funded, 1.3 million, and a few following, 1.9 million close. Oh, nice, very nice. It's Matt Clark in the last few months. Nice. So, oh wow, you're a funded millionaire now. Jason Severi. So here's what you need to do, right? If you're failing funded challenges, what you need to do is open up $1,000 account because you can easily open up $1,000 account. There's $1,000 nothing to you if you're failing funded challenges, right? Open up $1,000 account, aim to just trade that account for 3 months. If you can grow that account to, let's say, 50% or 100% in 3 to 4 months, then go over to funded challenges. Then you're going to do very, very well at that. But if you can't trade your own account with consistency and discipline, it's going to be very difficult for you to pass funded challenges. Man, I know people who've lost like 50,000, not 50, 25 to 26,000 worth of funded challenges in like 2 months. Because it's an addiction. You put in the money, you get like 100K account, you're like, okay, let's trade it, you fail it. You put in more money, 100K, you fail it. Then you put in 1,500 to get 200K because now you got a bigger account for you to recoup all the money you've lost, like in gambling, and then you lose that again. And the cycle goes on and on and on and on and on. So a lot of rich people I know. Psychology question. I doubled a dozen of accounts, okay? Passed 3 challenges with different firms. My weakness is trading is when I work with emotions, okay? When I think about others, how can I help them? Or if I have a bill to pay, this is where I fail. Any advice? I'm also seeing a therapist to help me out. Why are you seeing a therapist to help you out? Stop seeing that therapist. The therapist is not going to help you at all. The therapist is just going to charge you by the hour and ask you, how do you feel about that? That's it. You're still just going to be in the same fucking circle. So it's better to give that money to your mom or dad rather than paying to the therapist. At least you're going to get some blessings and prayers. A therapist is just going to say, yes, another goat down. Yes, Therapists don't really work. So what you got to do is you have doubled a dozen of accounts. You have passed three challenges. Now, I don't see where the problem is. If it's your weakness, if it's like whatever that is, I would say maybe just withdraw. Like if you're doubling accounts, you need to ask yourself, have you withdrawn money from that point? Because it's another thing to double an account, and it's a whole other thing to double an account and to withdraw some funds so that money feels real. And don't worry, you're not going to be able to help people in the first month, first 2 months, 3 months. It's not going to work like that, right? You're going to be able to help them slowly, but not all of a sudden. So whenever you're making these gains on your personal accounts or you're making gains on your funded accounts, just withdraw like small amount of money here, a small amount of money there, and just give some to someone. Therapists, all this therapy stuff doesn't work. I paid for a therapist once. This is when I lost a lot of money. Like, Quadriga got shut down, lost a lot of money over there. And it was just like a spiral of failure for me. And I paid a therapist online. And then the therapist started talking to me. And then there's this one question she asked me, and she asked me, so this Forex thing, can you tell me how this works? And then I thought to myself at that moment, I'm like, okay, she doesn't know what Forex works. She knows about gambling. She doesn't know about trading, overtrading, doesn't know about gold, doesn't know about me getting stopped out with liquidity grabs, doesn't know about me moving my stop losses. I'm like, how the fuck is she gonna help me when she doesn't even know the basic concepts about Forex, about trading? And this thought came to my mind within 2 seconds. And in those 2 seconds, I'm like, okay, you know what? Maybe. And I said to her, okay, I have to go do something. I forgot. So let's reschedule this meeting. And we ended the Zoom call, and I never went back because I'm like, this person doesn't even know what trading is. How is she going to help me? And I never went back. I'm like, yeah, screw this. I start the week being very tight on risk and being careful, but then Friday I'm full margin and everything. Yeah, like you got to ask yourself why. Why are you full margin? Because you have to write down certain rules. And for me, certain rules are as I get close to the end of the week, I'm gonna start to end my day. As I get close to the end of the week, I'm gonna start to end my day, which means that as Friday comes along, I'm gonna start to lower my risk and I'm gonna move more into how my trades were Monday to Thursday. Because Friday is the week where I start to pack up my mind, I start to pack up my trading account, I start to do all auditing of all the trades I did. I start to get ready for Saturday, I start to get ready for Sunday. On Fridays, I basically start to make plans with my family of what are we going to do on the weekend. So Friday is a very low volume trading day for me. Even if price is rocking and rolling, it's very, very low volume, apart from NFP. NFP, like whatever, like NFP doesn't really count over here. Is it possible to make money if you're being B-booked or just very hard? Doesn't really matter. And this question comes around a lot. There are brokerages who B-book clients, there are brokerages who A-book clients. Doesn't really matter. If you are making profitable trades, you're making profitable trades as long as you get withdrawals. Can brokers manipulate the price in other ways than slowing the bridge? No, they can't. Prices cannot be manipulated because the price you get from liquidity is the price you get. They can't be manipulated. Brokers can add delays to your executions. That's what they can do. They can add delays to executions. Other than that, yeah, nothing. Just delays, yeah. I trade 50K live and I turn it now to 70K within 3 months. Mashallah, very good. But the problem is I'm looking how Raja to turn 1 million during 1 year. See, you've turned 50K to 70K in 3 months, which means you made 20K in 3 months. I think what's going to be better to withdraw 5,000 a month. Because you got to get confident in now you're confident in making money, but you also got to get confident in withdrawing money as well. So start withdrawing 5K a month and see how that feels. Because once you're getting 5K a month, and now you got extra 5K cash to play around with, do things with, dinners, whatever you want to do, that's the most amazing feeling ever. Because then if you're making money from your business or if you're making money from your job or whatever, that's extra income coming in because your bills are being paid from the money you're withdrawing from the market. On downtrend, a big bullish candle, rejection candle means what? A big bullish rejection candle means that maybe a retracement is going to come along. Yeah, maybe a retracement is going to come along. Who here does not understand news? Who has issues understanding news? Okay, 1, 2, 3, 4, 5, 6 people. Okay, no problem. I still don't understand news. I understand. I only understand a handful of news. You know, I 100% understood. Well, I'm not going to say 100%. I understood news to maybe like 60, 70% when we had COVID, right? When we had COVID, that was a time where I sort of like understood news, and I only understood news from the fact of what's happening in the US and how it's affecting gold and how it's affecting yen. That's it. Because in COVID, what happened was they shut down the economy and gold started to move up. So when they shut down the economy and gold started to move up, I looked at it this way that, okay, they're shutting down the economy, which means there's no tax revenue generated, which means there's no retail sales, there's no employment, like employment rate is low, there's no money being made. So the US dollar is getting weaker, and that's what's pumping up gold. And then I clued in certain things because then I knew that, okay, in 2017, when Trump came in, the stock market was soaring, US dollar started to go up and gold dropped. So I'm like, oh, okay, this entire thing makes sense now. And when they had like, these old vaccines thing, like the vaccine news started to come in. And then I understood that, okay, when the vaccine news comes in, this means that when there are vaccines made, there's a high probability for the economy to get back in shape, which means retail sales can go up. So this means the dollar can get better and gold can continue to move down. Because if you guys remember, during COVID, whenever they had news for the vaccines, gold would always drop down. And whenever they would have news, oh, we have these many rise in cases, gold would always go up. So that's how I started to clue a little bit of a things in. Then NFP came, started to understand more about NFPs as we moved into more like, the vaccines environment, because, more and more vaccines came in, the cases went down, NFPs started to get better and better because more people started to go back to their jobs, and then Russian-Ukraine thing happened. When Russian-Ukraine thing happened, that was actually very, very easy for me because we noticed in 2017 and 2018, Kim Jong-un would he would test his torpedoes and bombs over Japan during the Asian session, and every time they would do that, gold would go up. And also when Trump was in power, Trump would have like this, like, trade war with China, and he would always tweet about China. And whenever he would tweet about China, his tweets were considered risky to the dollar, so gold will always go up. So when Russia and Ukraine thing happened, we knew, me and my buddies, we knew that if Russia does everything to Ukraine, gold is going to go up, keeping all those past events in mind, right? Then same thing with CPI and retail sales data, because like, when the economy started to get better after vaccines, then I understood that, okay, if the retail stores start to open up back again, that means the retail data is going to be bigger. And then that means gold should go down and dollar should continue to go up. Same thing happened with NFP during Christmas. During Christmas, Black Friday, a lot of temporary jobs in the market. NFP is good, which means gold should go down. The economy is better because more like, temporary jobs are created and stuff like that. So I still don't completely fully understand news. I don't trade based on news. I don't trade based on fundamentals. I only trade based on price action. And most times when you look at price action, it's going to tell you a little bit where news may push price. Because I believe wherever news is going to push price, price action is going to form in a way that if you look at it on the 4 hour or the daily, you're going to say, oh, okay, this made sense. This made sense that we moved in this direction or whatever. I'm using another way of trading news where I wait for the news candle to come up quickly and then I wait for the reversal. Very risky, very risky. You have to have an understanding of the narrative right now. It's all about data, job data, and the soft landing effect. That's true. I have issues on how to calculate gold pips. How do I calculate the profit loss? Okay, so I explained it, and I'm going to explain this one last time. When you are looking at gold, right? All right. See this right here in the chart. Let's say we're looking at gold over here. Okay. So let's say gold is at 1914. From 1914, gold goes to 1915. What's the change in price on gold? $1, right? That's the change of price in $1. Gold changed by $1. So this means gold changed by 10 pips. That's how you calculate price on gold. Gold changed by 10 pips. Every dollar is 10 pips, exactly. So if gold goes from 1913 to 1920, that's $7 change. That means 70 pips. And pip value on gold is higher than the pip value on pound yen. Which is why sometimes if you open one lot on pound yen, 10 pip move on gold is going to be $100 on one lot, but a 10 pip move on pound yen on one lot is probably going to be 80, 85, or 90 some dollars because pip values are different. Pip values are very, very different. I'm waiting until I can increase my account by 50% before buying a challenge. That is excellent plan there, Christine. Where can we find pip value? You can't. Oh, I think you can. You can, right? I'm not sure. I haven't really looked into that. So let's see here. Not over here. Right click. So what we got to do is specification. There we go. Digits, 2 digits. Okay. Spread is floating. Floating spread, right? Floating. It's not a fixed spread. We don't have fixed spreads. Tick size, it's a CFD, margin rate, trade full access, good till canceled, filling immediate or cancel, immediate fill, there's no delay. I'm not sure whether this means a delay or not. I'm not sure. All right. Maximum lot size 500. Okay, that's good to know. Didn't know that. Swap rates are over here. Commissions 3.5 per lot. This is the opening times of gold. I bet most people didn't know this, right? Opening time of gold over here. But yeah, it doesn't say that over here. I think okay, so the lot size is based on your currency change, right? So gold is pegged to the dollar, so 1 pip is going to be like $1 on one lot. And like if you have a USD account and you're trading GBP JPY, 10 pip move on a one lot is not going to be $100. It's going to be less based on what the difference between the US dollar and pound is, basically. Easiest way to explain it. Magic keys will do the work for you. That's correct. Has gold been profitable for you or GJ? Gold. Where is the Discord? Would you post your copy of the notes? We'll post a copy of the notes in this new drive we have. So you're gonna get that. You're gonna get that probably by tomorrow. Once we have everything ready. So probably by tomorrow, you're gonna get that. Whenever I close in a loss, price always goes in my direction. That's true. That happens all the time. Whenever you close your trade in a loss, price always goes in your direction all the time, which is why it's very important to understand how are you going to give your trade a second chance, something that we went over yesterday. And also there's another series of webinars we have, Smart Budget Concepts. That's also going to be added to the drive, or some of you guys also already have access to that. Those are also very important because we've explained in great detail on how to add positions back to your trade. Can you spend time talking about psychology and your transition, 1 to 2 trades a day, and how it made an impact on you, how you became patient in the market and didn't get FOMO when you saw big moves? This is my biggest issue in trading, feeling impatient and wanting to make money. And right now it ends up ruining my result. Yes, sir. No problem. We'll go over this right now. Are we getting any trading plan or something? No. Why are you going to get a trading plan? What makes you think my trading plan is going to work for you? You have to make your own trading plan. I want to see trading plans sent on Sunday. Okay. Now, when I was over trading, so this question goes back to the time when we started to trade. When we started to trade, it was very, very simple, right? We were only trading the 4-hour candles, and this is where I can show you right here. So let's go towards the 4-hour. So we were only trading the 4-hour candles, right? And when we were trading the 4-hour candles, we would only look at when the 4-hour candles are creating resistance. We were looking at the gold, we were looking at, pound yen, we were looking at Euro USD, pound CAD, AUD USD, AUD New Zealand, like every pair. I was looking at like 6, 7 pairs at the same time. And all we were doing was looking at the 4-hour candles. So every 4-hour, whenever a 4-hour candle would close, we would look to see if we closed near a support. So let's say this candle closed at a support. I'd take a buy, stops would be below the previous candle, and I'd let the trade run. Either I'd get stopped out or the trade would go in big profits. That's what I did for the first 3 months, and it was like crazy. It was so easy. It was so easy. I looked myself and I'm like, man, this is amazing. If I can keep up with this, I'm going to make a lot of money. And the plan and the idea was great because every 4-hour candle, we now know that every 4-hour candle is going to be sort of like a volume time, apart from the Asian session. But what happened after a little while was that we started to do this. I was like, okay, I'm getting stopped out. And sometimes I get stopped out and price goes in my favor. What can I do to prevent that from happening? So what I did was, I was like, okay, if price goes in a drawdown, I'm just going to remove my stop loss. And if I remove my stop loss, then that's going to give me some more opportunity to kind of like, stay in the trade longer. So I started to remove my stops at that point. So when I started to remove my stops at that point, I would get huge drawdowns because I wasn't following my plan that I started with. And once I started taking losses, then I started to look at other sessions, right? I started to look at London Opens and New York Opens. All that strategy about 4-hour candles went out the window, and I was looking at every 1-hour candle close and every 30-minute candle close, and I went from taking 3 trades a day to 15 to 20 trades a day. As I went into that 15 to 20 trade a day mark, I started to lose more and more and more and more, and I did that for about 6, 7 months, and it came to the point where I lost so much. And I turned around and I asked Ted. Ted was amazing guy, regardless of whatever happened, amazing guy, right? I asked him, man, like, I don't know what's happening because the first 2 months, 3 months were wildly profitable. And now I've lost that money and some more. I have no clue what happened. And he told me something that was so profound and so simple that when I think about it now, I'm like, wow, why didn't I think about this before? Like, was I so emotionally involved in my own pain and grief of having these losses and trying to explain where the money is going and like, like getting all this credit card debt? Like, why didn't I think of this before? And he said to me, look at the first 2 months that you traded and identify what difference is now that you're trading versus back then. What's the difference? What's the difference between two times? And I was like, okay, you know what? I'll try to do that. So I looked at my first 2 months and I noticed that in my first 2 months, I was waiting for the 4 hour candle to close and I was executing a trade, right? If I'm waiting for the 4 hour candle to close in the Asian session, I was trading AUD USD or AUD JPY. If I'm waiting for the 4 hour to close in the London session, I was trading pound USD. New York session, I was trading USD CAD or USD yen. That's all what I was doing. And when I was losing, I was trading at least every 1 hour candle I was trying to trade and every random pair I can find, and I thought to myself, man, like this is actually very interesting, because when I was losing, I was like, it's very logical, right? Like it's very logical. Like if you look at it this way, it's very logical because if you see when you're losing, you're over trading, you're over risking, you take a loss, you want to make that loss back, you take another trade, right? Now you lose, and now you make that loss back, you lose again. And now you're like, okay, I've lost 2 trades in a row. Let me increase my lot size so I can make this loss back because I see this amazing setup now and I'm going to increase my lots. You increase your lot size and you lose that setup and you lose some more. Or when you win, you're like, perfect. I'm winning my trades. I'm on a roll. Let me take another trade. Because when you take another trade, you want to increase your wins. You lose that trade, you lose profits. And now, like, fuck, let me make those profits back. You take another trade. Now, instead of making those profits, sometimes you do make those profits back and you take another trade. Now you're in negative, So these are the things you really have to keep a check on. You really have to audit yourself, your feelings, how you feel when you come into the charts, how you feel when you're losing a trade. Because a lot of time what happens is our emotions connected to a loss are way bigger than the emotions connected to the win. Right? Who gets really emotional here when you lose and who gets no emotion when you win? I bet everybody, right? Because you've lost so much that when you lose, the emotions are all over the place. But when you win, you're like, okay, let's try to get another win. Like when you lose, you never say, okay, let's try to get another loss. Right? When you lose, you're like, oh man, this thing is not working. This strategy is not working. This guy doesn't know what he's talking about. He's a scam. This guy's a scam. Things don't work. Like, I don't know what the fuck's going on. That's what goes through your mind when you lose. But when you win, you're like, perfect. Thank you. Thank you. We won a trade. Let's see if we can win another trade. Here, buddy. Let's see win another. Right? That's not the way, kind of like, that's not the way to approach things. So whenever you're going through this idea of like, I want to take another trade, just step back. Literally, just step back from your computer and fold your hands and ask yourself, I've lost a trade. Should I be taking another trade? And an overwhelming answer is going to be no. But that devil on the other side, on the left-hand side of your shoulder, is going to say, no, take it. Take it. Candles are closing bullish. Take it. Take it. But you got to say, no, I'm done. I had to take just one trade and now I'm going to come back the next day. That's all what you got to do. Whenever I lose trades, I just call it a day. I'm just like, okay, you know what? I'm done. I'm going to come back the next day. I don't even want to take a trade. When I lose a trade, I'm so put off. I'm not only put off by the markets, but I'm put off by myself. Because if I respect myself as a trader, as an educator, as a mentor, I cannot lose a trade. If I do lose a trade, I'm just like, wow, why did this happen to me? What was different right here? So those are the questions you need to ask yourself. You need to respect yourself as a trader. Whenever you do lose a trade, you need to ask yourself, okay, this is interesting. I shouldn't be losing a trade. Let me investigate why I lost this trade. And while you investigate why you lost that trade, the urge of taking another trade is going to automatically go away. Automatically is going to go away because you have to detach yourself away from the charts. Just say, no, I'm going to investigate why I lost this trade. When you win a trade, you got to look at that and say that, okay, I lost the trade. Let's investigate how I could have made a better trade, how I could have added another position, how it could have made more money on this trade. Because if this happens the next day or the next week or the next month, I have to be better prepared to kind of exploit this trade even more. I've never tried to get funded account. Don't know is good to have. Can you please explain, or should I stick to my account only? Stick to your account only. Like if you have no need to get a funded account, there's no need. Was it wise to add positions here? I have no idea. That's not me. That's my photocopy. So I have no idea. If anyone is a reader, trading in the zone helps with controlling emotions. Yes, the only thing that's going to help you control emotions is you. You will help. I know this one guy, he's made a whole webinar about trading in the zone, and he's the worst trader I know because he can't control his emotions. So reading a book is not going to help you, control emotions. I've read that book like 4 times, 5 times, never helped me to control my emotions. The only thing that helped me to control my emotions was myself. Just one trade a day, and then that's it. Seriously, it's just that simple. I feel when I win, I'm still calculating what I lost overall and look at it as if I'm still down, like I'm in a casino. Yeah, that's very normal. That's very, very normal. When you do win, it's very normal to see how much you are still down. But every day is a new day. When you do win, celebrate that win that, okay, you won a trade, and now it's time to see whether you can find the same scenario, the same setup the next day, next week, and execute on that. That's it. Never take a look at a loss. Only take a look at the loss. Okay, there's a difference, right? There's a difference in looking at there's a difference in looking at a negative number versus there's a difference in looking at a losing trade. Don't look at a negative number because that's going to put you in a form of stress, anxiety that you got to make that number back. Look at the losing trade. If you can look at the losing trade, then you can learn from that losing trade. You're not learning shit from a negative number. You're just getting anxiety. So look at the losing trade and see what could I have done something different, because this thing is going to happen again. It's going to come on the charts again, and you better be goddamn prepared to not make that same mistake. If this was an overtrading mistake, then that's a whole nother thing. But if that's a thing where you didn't look at the proper time frame, or you miscalculated risk, or you miscalculated the 30-minute candle, the 1 hour candle, or confirmation, whatever the case may be, right? You can learn a lot from a losing trade. Always look at a losing trade. Don't look at a losing number. Losing trade, much better. Losing number, hell no. It's anxiety. If you stop by end of this year, we are going to be lost without you. I'm not stopping. The live streams are still going to continue on. If we win, how many should we take or keep it to 2 to 3 trades a day? No, 1 to 2 trades a day. I have a trading plan which I have revised since this course. Can we share it? Sure, share it. What books did help you on your trading journey? Very interesting. I shared my 3 books today on Twitter. The first book was $100 million offers, but that doesn't necessarily relate to trading journey. The second book was 10 Essentials of Trading. And the only chapter I got from that book was the chapter on consolidation. And the third book was Straight to Hell by John Lefebvre. That book is about investment bankers and traders and the shit they do, all this and this. So there was one takeaway from that book was that they have these brokers and traders that maybe spend 2 hours working, and the rest of the day they spend on boozing and cocaine. That was exactly in the book. I'm like, okay, this makes sense. Because if they're making money only 2, 3 hours working, this means they're only trying to trade like maybe 2 to 3 hours, and the rest of the day they're just doing whatever they want. So I'm like, okay, this made sense. But the entire book is actually really hilarious. You have to read the book. Very hilarious book. What's this? YouTube link? Oh yeah. Very, very good podcast. Very good podcast. How important is fundamental analysis to win more trades? It's not important at all. Fundamental analysis is not important. I very rarely do fundamental. The only fundamental analysis I'm going to do on the charts is just going to be a buy stop and a sell stop before news. That's it. No, nothing else. Like that's my extent of fundamental analysis. Fundamental, yeah, I don't know. Unless you're trying to write articles or you're trying to post news or whatever, then it makes sense. Other than that, it doesn't. Have you ever tried writing goals and affirmations next to your trading screen? No, I don't have any goals written. There's no goals written. No, I don't think. I don't think shouting affirmations in a mirror or writing down your goals help. Executing on your goals is much more important than writing them down and like saying affirmations. I think executing on goals is way better and executing on plans as well. If you plan on doing 1 to 2 trades a day, you got to execute on 1 to 2 trades a day. That's it. That's all what you got to do. You got to execute on 1 to 2 trades a day. If your goal is to, like fuck up your account and overtrade, be my guest, do that. We're so good at executing 5, 6, 7, 8 trades a day and just losing money, but we're not so good at just executing 1 to 2 trades a day. Executing 1 or 2 trades a day is relatively easier than executing 8, 9, or 10 trades a day. It takes a lot of mental strength to do 10 trades a day and lose. And it takes a little bit of mental strength to do 1 to 2 trades a day. Because if you can take one trade, that one trade can be over in 10 minutes, whether a win or a loss, and you're done for the day. Few days ago, I had a loss of like 2,000 and my next trade went 1,700 profit, but I didn't close it because I wanted to make the loss back. Yeah. There was a time my account was at $9,970 and I wanted 30 more dollars to have a good $10,000 right there. And you know where I'm going with the story, right? Yep. I ended my day at 8,800 something just to make that extra 30 bucks to get like a nice 10,000 figure. I fucked it all up, didn't, didn't really work. So yeah, I can relate to that. I can relate to that. If you started again, what would you do differently, if anything, to attain everything you have in a shorter period of time? If I had to start this again, I would start with a $500 account. I would choose a time that would work for me. Like I would choose pre-London or London Open, and I would focus on one trade, and I would see if I can grow that $500 account to $1,000. And if I would do that, I would withdraw 500 and I would go put money in a company funded account. I would get myself a funded account and then I would trade that funded account because now they have these very relaxed rules like unlimited days and whatever. Like it's very, very relaxed. Like guys tell me all the time now it's very, very easy. So then I would just do that and I would make money from that, get like capital of about 20, 30K and put that in my trading account and just trade that. That's what I would do. But this plan would be like a 6 to 7 month plan. 6 to 7 month plan. Sometimes knowing some fundamentals helps me long trades. Oh, nice. That's good. That's good. My plan next week is 3 trades only. Perfect. Um, I feel like quitting trading. If you feel like quitting trading, it's because again we keep going back to the same things over and over again. If you feel like quitting trading, that means you're over trading and you're over risking. There's nothing more to it. Give us some fake out advice. Oh, variable support resistances. Okay, so what should we do first? Let's see if we can get some fake out information right here. And we're going to trust our handy dandy iPad to connect now. So let's do this. All right, what's this? Omar Ashraf wants to meet up tonight. All right. Let's do it. Well, I guess it's not working over here. Let's try another way over here. Do brokers look at your trader? That's a profitable trader. Let's copy. Do they look at order flow? No. We look at order flow on our back end. We look at order flow, but we never look at a profitable trader and see, oh yeah, let's copy them. No. Have you got VPN enabled? No. My VPN is um my VPN. Oh, it wasn't even on my VPN. My VPN is, yeah, it's off. For some reason, my iPad doesn't show the message of trust this computer. Where would you see that? Trust this. Connect your iPhone iPad to this computer via cable. When prompted, select trust. Yeah, it's not showing anything about trust, buddy. VPN is off. Connected to Wi-Fi. Yeah, nothing.
Maybe your firewall's blocking it.
No, I don't have a firewall. Let's do this. Um, okay. I have done something which may just work now. I am smart, and my smartness should pay off. I am very confident in this. Just gotta let it load, let it populate, and and oh, apparently not that smart. All right, unable to connect to Zoom, but it shares my screen. Okay, sharing my screen, that's not a problem. And over here, it says that I have started sharing a screen, but what screen is it sharing? Um, let's say that I'm gonna share my desktop, right? Okay. Let's say I'm gonna share my desktop. One sec. Zoom. How do you share thing over here now? All right. I get see over here. And okay, perfect. I'm smart. I outsmarted the computer over here. Okay, so this is day 3, day 4 was right over here. All right. So if you now for some reason I have another problem. So it's still recording, it's still recording. And the problem is that my pencil is not working. Okay, anyway, fake outs, right? Let's say we have a support and then we have a resistance like this. Okay, we have a support and resistance like this. And all right, one moment over here. Okay, there we go. We got Apple Pencil, 100% charged. There we go, perfect. And a fake out is basically when price pushes out of, let's say, a support, and then it continues to go back in the range. That's what it means when you have a fake out, right? And if, let's say, for example, if we did push down after consolidating, and if we push down, this means we should continue to push down. But if we continue back in the range, this means that if we couldn't push to the downside, then there's a very high probability we should continue pushing up to the top side, break out of this area, and then continue to push up. That's what it means to have a basically fake out. So what does this mean when you're looking at the candlesticks as a whole? So let's say, for example, we have another support, and then we have a resistance, and price has been consolidating, and now we have a candle that's pushing bearish, and we continue to push further bearish. And now you're thinking, okay, can we take a sell at this point, right? The answer is going to be no. You cannot take a sell because we already pushed down 1, 2, and 3. So now if you do take a sell, that means you're anticipating the next candle to continue to push down, but there's a high probability we may continue to push up to maybe create some sort of a resistance over here. Right now, instead of creating resistance, we continue to push back in the range. Now, once we have continued to push back in the range, for a fake out, is this a good opportunity to take a buy? No, I don't think so. This is not a good opportunity. The reason why is because we have 1 candle moving bullish, 2 candle moving bullish, and 3 candle moving bullish. Taking a buy would mean that now you're anticipating for the 4th candle to just magically show up and continue to push up. That's going to be a big no-no. Essentially, what you want to do is you want to see if we create some sort of a market structure for price to continue pushing up. That's what you want to see at this point. But I used to trade fake outs a lot, but I stopped trading fake outs because, like my success at fake outs wasn't that good. Essentially what a fake out means is that whenever price has been consolidating, we do know that the longer the consolidation, the bigger the breakout. So if we had to break out of this area and continue pushing down, and if we couldn't push down, and if we came back in the range, now this means there's a higher probability we can continue to push out. Fake outs are only there for your education, that you understand what it means when price is doing a fake out, or you understand what market structure it's forming. That's the only reason you need to know about fake outs. Whenever there's a fake out scenario, I very rarely look at fake outs, right? So if I'm trading in a live environment, and if I'm waiting for some sort of a resistance to form right here for price to move down, and if it does not happen, then I'm not going to say, oh, okay, like a resistance wasn't formed. So, now we're closing back in the range. So let me take a buy. I'm never going to say that. I'm going to say, okay, you know what? If price didn't form a resistance, then maybe I'm not going to take a trade. I'm not going to focus on the trade because we didn't really form a resistance. If it goes up back in the range, then I'm just going to say, you know what? I'm done. I'm not going to do anything at that point. Because a lot of times what happens after a fake out is that, let's say you have the support formed and you're like, okay, let me take a buy. A lot of times what's going to happen is that price may continue to push down and form a structure like this. And now you try to take a fake out trade, you try to take a buy, you've lost at that moment, and now price has formed a situation where your original bias is about to play out. And now you've lost the trade, you've lost confidence, and the next candle starts to push down, and then you're like, oh man, I knew price is going to go down. I just got fucked over with a fake out. So fake outs are very, very risky. Impulse entries are very, very risky. So I would say maybe just stay away for potential fake outs. So just also, also you never have to change bias. Never change your bias. Never, ever change your bias. This is a big no. If you're going to go with a sell, just stick to sell. When do you know when to take a profit? At what point you decide to sell out your position? Do you predetermine that, or do you watch the market decide? I mainly secure profits the first 2 or 3 days of the week at around 15 to 20 pips. Depends on the range as well. Like if there's like a 25 to 30 pip range, I'm going to secure profits at like 15, 20 pips. How about trend versus where price can go? I don't know, like trend is like it depends. Like it depends. If you're looking at a 4-hour candle, goes back to all the examples we've done. If you're looking at a 4-hour candle and you think price can continue to push down, then on the lower time frame, you're looking at some sort of a resistance. If you think price can go down, then you're looking at a resistance to form. Yeah. A good setup for a trend in a range. Is it okay for you? No, the range has to be 35 to 40 pips. It has to be a big enough range for me to actually see, okay, can I get something out of that range? How would you describe your trading style? My trading style is breakout, bounce, and breakdancing. That's the best way for me to trade. That's my trading style. When I see a breakout, I'm like, oh, yeah, we're gonna win a trade today. But no, like my trading style is that if I see a high being formed and price retraces to create support, I'm gonna go all in on that trade because based on what I've seen, I know that there's a high probability I can win a trade. That's my trading style at that point. Then I know then there's a high probability for me to win a trade. So I go based on that. How do you determine whether it's a fake out versus a retest? Very easy. Extremely easy. Fake out versus retest, right? So we have a support, we have a resistance. Actually, hold on. So we have a resistance and we have a support, right? So candle comes up, breaks out, and next candle goes up, whatever, going up, whatever, right? And then we have candles coming down, bearish. We have another candle coming down, bearish, right? And then we have another candle closing like this, right? And now you're waiting for some sort of a retest. You have a retest where we form support. You're like, okay, now we can go up. You take a buy and price goes up. You win a trade, happy days. But instead of price going up, let's say this is a 30-minute time frame, the next candle goes down and you lose the trade, and then that's it. You call it a day. You don't think about this being a fake out. You call it a day. You're like, okay, you know what? I'm done for the day. That's it. And if the next candle maybe like, instead of creating a support, we continue to push down, then this move up becomes a fake out. That's it. How not to get caught in a fake out? Who plays sports over here? Who plays soccer over here? Soccer, right? You guys play soccer? How to not get dodged by your opponent? There's no way to tell, right? If someone's coming at you with a soccer ball, all scissoring around the ball, how do you know if he's going to shoot left or right? You don't know, you know? Like, how do you know if someone is not going to sidestep you? You don't know that. So whenever you're in a trade and you're anticipating price to, move up, how do you know it's gonna go back in the range? You don't know. You don't know that. The only thing you do know is that you're gonna manage risk. That's it. That's all you know. And that happens to me sometimes as well. That price goes back in the range, and all I can do is manage risk. That's it. All I can do is manage risk. There's nothing more that I can do at that point. What withdrawal percentage do you recommend? Maybe 10%. 10%. Withdrawing 10%. That's still very good. Right? So let's move on towards something I call variable support resistances. Very, very simple concept, but very, very important. Variable support and resistance. Ever since I've been using this iPad, I've been really enjoying doing handwriting opposed to typing. I miss handwriting. I can also write in my native language. Yes, my native language. All right, anyway, let's go over here. Right to left, yeah, we write right to left. That's Urdu. So I wrote, my name is, Raja Rakil. That's what I wrote. So this is a 30-minute time frame. Let's go over to the 1 hour time frame, and this is the 1 hour time frame. And yeah, I think this is going to be I'm going to look at a good example to demonstrate variable support resistance. Let's take a look at pound yen, 1 hour, variable support resistance. Okay, I think this is a good example right here. So let's say, for example, that we had price over here, right? We had price right here. My writing looks like that in English. Bad, right? Okay, so let's say we had price right here and we had support, price went up, we created resistance. Now, as price was, so the concept of variable support resistance is very basic. It's very easy, basic concept. Just the wording sounds like it's going to be some rocket science. Trust me, it's not. So price create resistance, we're coming down, and essentially we should come down towards this support. But we don't come down to that support. We create a support like this. Once this bullish candle breaks the previous candle's high, and this is our new support now. This is the whole concept about variable support resistance. That's it, right? That we create a new support. So let's go over another one, right? I think when we're going to do our simulation, then we might look at some more examples right there. So let's take a look at this one right here. So let's say that we had support right over here. We had support, and we were saying that, okay, this is our major support or whatever, right? Major support. And we're anticipating price to continue down to the support. We move up, create resistance, we come down, and then a new support is formed, right? This new support is formed. Support right over here. Now, if we break below that support, then price can continue down to our previous support that we had earlier. That's it. That's our variable support resistance. Is this variable support resistance the new module you were talking about? Really have to rewatch the webinar. No, there's no such thing as a new module over here. It's just like what the previous support was and just creating new supports. So those are our variable support resistance. I'm looking at I'm looking for another example. I think this would be better right here. So if we take a look at this, right? So essentially, let's say we had a support and this was our resistance, right? So this is basically the range. So this range is based on this resistance and this support. So this is the range, right? Based on the support resistances implied. Now, price went up and we created another support. Now our range is based on this support and this resistance, which is this right here. So the previous one doesn't count because now we've created a new support. Make sense? How back do you look at support resistance? The most recent one, the most recent. So let's say if price comes down to this support, and if you break below the support, I'm looking at this support to the left-hand side, price to move down. Just the most recent one. Never looking at all the way to the left-hand side. No, just the most recent one. Just the most recent one is going to be the support resistance that we're looking at. Can you talk about how areas of support resistance form to the left of the chart? This variable support resistance is very interesting. No, there's nothing to talk about the areas to the left. I mean, if you have a support right here, and if we break below this support, then based on these clean candles to the left, there's a very high probability we can continue pushing down. That's it. If price is pushing down, you're looking at where is the support to the left, right? So this is the support we have to the left. So this is where price can move down over there. Share your experience on how to determine when to increase lot sizes. The thing is, when you increase lot sizes, it's very normal to lose the first trade on a higher lot, right? Whenever you increase your lot size, you lose the first trade all the time. And whenever you lose the first trade on the biggest lot size, the first impulse is to reduce your lot size and go back to the smaller risk, right? That's the first impulse. That's what we all do. Like if you're trading on a 0.75 lot or if you're trading on a 50-cent lot and you increase your lot to 1 lots and you lose the trade, the first impulse is to go back to the smaller lot size, and then you have this massive win on the smaller lot size, but that win does not cover the loss you just had on the bigger lot size, right? I don't know about you guys, but this used to happen to me all the time. And then I realized that, okay, if this is happening to me now, what do I got to do? And what I had to do at that point is to just stay on the same bigger lot and just manage risk. Because if you can trust yourself that you can manage risk, you can easily increase your lot size. Very easily. Because if you're trading, let's say, 0.5 lots, or if you're trading 0.75 lots, which are still pretty big, and now you've moved up to 1 lots, you just have to manage risk. If you're losing, let's say, $50 on 0.5 cent loss, or if you're losing anywhere from $45 to $60 on 0.5 cent lots, then on 1 lots, maybe you're losing anywhere from $50 to $80. This saying that you're managing risk. So you still have a manageable risk. So you don't have to say that, okay, you know what? I'm going to take a full loss on my bigger lot size. No, you got to be confident enough that you can manage risk, which is the reason why you're increasing your lot size. Because like, losing $80 from $60 is not a huge difference at all, like by percentage. It's still very small, but you're managing risk because if you are winning, you're winning like, $100 to $120 because you're keeping your losses small because you know how to manage risk, and your wins are whatever wins you're getting when price moves in your favor. Just get magic keys. Yeah, exactly. Just get magic keys. So basically, a new support is formed inside the range, creating a new support that's a variable support resistance. Yes. Was the meaning of variable support resistance is to redraw your support resistance as the price moves? Yes, exactly. So variable support resistance basically just means that you're redrawing as a new support or resistance is created. Let's say, for example, you have price coming down like this. This is the 30-minute time frame. We have price moving down, and then you have a bullish candle forming, and now you have a support form, right? And then price moves up, and price moves up again, and then you have another candle that moves down, whatever, moving down, and then you have another support form. So this is your new support form. Now you're no longer looking at trades based on the older support. Now you're looking at trades based on newer support form. That's all what it is. So the entry is only on the 1 hour and 30-minute time frame, and the 15-minute is used to manage risk. That's correct. But if you can't find support resistance on 30-minute, is it okay to draw on 15-minute? No. You will always find it on 30-minute. Any FOMO tips that worked for you? Fear of missing out. What worked for me always was to knowing that the same trade is going to happen again tomorrow, if not tomorrow, day after tomorrow, if not day after tomorrow, the next week. It's always going to happen over and over and over again. That's what helped me with FOMO a lot of times. A lot of times I would see massive moves on gold and I would chase those moves on gold. And a lot of times I would lose. And then a week from there, I would see the same move happen again. So now I've matured enough in the market, knowing that those same moves are going to happen over and over and over again. You talk about a candle breaks or stop right in the first 1, 2 minutes, you don't take a trade. Can you expand on that? Yeah. I mean, if a candle moves and or breaks in 1 to 2 first minutes, I normally don't trade at that point. I just wait for to maybe make a move to the opposite side and then start to move in our correct size. What would you say about opening a trade, setting up stop loss and TP and walking away? I don't think that's a good idea because unless you're not planning on managing risk, you can do that. But if you're planning on managing risk, which I highly advise, don't do that. Yeah, because you have to manage risk. What's the risk reward ratio that you recommend? There's no such thing as a risk reward ratio, to be honest. There's no such thing as risk reward ratio, which we will go over in our simulation. So here's what we're going to do. I'm going to take a 5-10 minute break. I'm going to let whatever we've done in Zoom to kind of like buffer and save. And then we're going to come back with simulation. And I'm going to have you guys help everyone to take some trades during our simulation. I think that's going to be better. So we're going to do that. So we're going to see you guys in 10 minutes. Again, there's going to be a new link sent to Slack. So, Will, I don't know what you do. You don't see the link. It's going to be sent. So you have to click on it. All right. All right. We'll see you guys in. Now, how do you close this thing here and back? Okay, awesome. So see you guys in exactly 10 minutes.